All right, what up, everybody? This is Jeremy with Escape Velocity Trading coming at you for another market bias update report for Sunday, December 22nd. First off, just a reminder, this is going to be a holiday trading week, so the markets will close early on the 24th at 10 a.m. Pacific Standard Time and will remain closed through Christmas on the 25th, reopening at normal operating hours on the 26th for the remainder of the year. So, before we dive into analysis and before we dive into looking over last week's trades and trading results, I want to offer an opportunity for everyone. This is to celebrate hitting not only my first trading income goal this year, but my second and now officially my third as well. My first trading goal for this year was to lock in $120,000 worth of gains. I hit that. I moved my goalpost and wanted to hit 150. I hit that, and now I have just crossed locking in over $200,000 in gains from the market this trading year alone. To celebrate that, I want to give back to the community, those of you that have supported this channel, and I am offering 3 different free coaching sessions with me to help you get on track for 2025 to win one of these 3 spots for a personal one-on-one coaching session with me. All you got to do is comment on the YouTube video saying that you would like to participate and like this video on YouTube. That is it. So, diving into the results from this last trading week, you can see here the wins and losses on our futures trading. Started off the week really strong, hit a little bit of a bout of turbulence, and then picked back up. Ended up locking in $30,879 worth of gains this last trading week with 9 losses, 15 wins, and a total of 26 trades. I also lost 1,000 in the options market, which is calculated here. So we actually gained just under 32,000 from trading futures, had the $1,000 loss resulting in that $30,879 gain for the week. As you can see here, before actually going in and looking at the charts, I want to point something out because Bitcoin has been going through some volatility. As you guys know, I trade a lot of Bitcoin futures. I kind of specialize in trading Bitcoin right now because I knew that it was in a big move over the last year, and I wanted to capitalize on that and get very intimately knowledgeable of that price chart. So here I want to point out that I am playing shorts just as much as I am playing longs. Even within the volatility that we have had, I closed the week going long, even though it's been pulling back. I had multiple short positions as well. And this is one of the signs that you can look to know if you really have mastery over a skill set and you really know how to trade the financial markets, because trading with the trend is the easy part of trading. And when you first get started, you should always trade with the trend because your probability is going to be improved by doing so. But when you get to know an instrument, when you get to developing your system and you trust your system to the point where you can profit on both sides, regardless of whether or not the price is going up or whether it is falling, and you can switch back and forth between the two, depending on what you are seeing on the chart, even in intraday day trading scenarios, that is where you know that you have mastery over your craft. So I just want to point that out because it is important to be able to make money in the market when prices are going down and not just watch your long-term positions bleed out and worry about when the market is going to put a bottom in. You will remove so much stress for yourself in the market as a participant if you know how to make money on the way down just as well as on the way up. So I wanted to draw attention to that. So let's dive into the charts. Let's dive into our analysis. Futures have opened up here about an hour ago, hour and 20 minutes ago. Right now, we did start to get some selling that I had said I was expecting it to come into the market for quite some time. I actually called that back here, and we got one last little push higher. And now we have seen that volatility come in. So far on the S&P 500, we are holding the 50-period moving average, and you can tell how important that 50-period moving average is over the long term. We are holding it for now. I don't 100% know if we are going to continue to hold it. The next few days to close out the year, each day that the market is open, we are going to be experiencing lower trading volume because most people on Wall Street have gone on vacation. And with lower trading volume, that usually ends up bringing in higher volatility. Now, that can go to either direction. It can be higher volatility to the upside or higher volatility to the downside. Basically, it just means that big orders are going to impact the market's pricing more so than it normally would because there are less shares trading on that. And so each trade accounts for more of it. And the price has to move up and down to find other buyers or sellers to take the other side of that. And sometimes that movement has to be fairly significant to get to a point where two different orders can get matched up. So right now, the S&P is holding support. Our RSI is declining and actually has switched into bearish territory. So this is giving a little bit of cause of concern and making me less interested in buying the dip down here. Our MACD has also crossed into bearish territory. For a couple of weeks now, I've been saying that we had decreasing highs on both the MACD and the RSI, and that is divergence. That means that the price is going up in the price chart, but the highs are going lower on some of our indicators, showing that the turbulence might not be over yet. We also have seen a big spike in trading volume on these down pressure days. That tells me that there is more interest currently in selling than potentially we've had before this year. So keeping an eye on that, keeping an eye on our volume. Going out to the Nasdaq, going to be very similar read. You can see again the decreasing highs on our RSI. Our RSI still is in bullish territory. It has not dipped below the 50 line yet, so that is a positive for the Nasdaq. And the same thing goes for our MACD. Our MACD has signaled a crossover, which is our initial warning sign, but it has not crossed into negative territory down here yet. So it is not a cause of huge concern, but just a place of caution, wanting to make sure that we are keeping an eye on the indicators that we choose to rely on and watching to see more development before getting into a trade. Right now, I am expecting probably at least for the remainder of the year that the 50-period moving average on the Nasdaq will likely hold. I'm kind of just foreseeing just extra chop above that 50-period moving average and allowing some of our other longer-term moving averages to play catch up. Going out to the Russell. The Russell, we can see more volatility. We broke our 50. Our 9 EMA actually crossed bearishly underneath the 50-period moving average. That is not a great sign. So far, we are holding our longer-term diagonal support line. Even though we tested below it, we came back up and closed above it. So this support is holding for now. But the MACD and the RSI are both firmly in bearish territory here. So we need more development before wanting to trade this chart. Going out to the Dow Jones, basically rinse and repeat, looks very, very similar to the Russell 2000. The only difference here is that going back to the Russell 2000, we came down and tested our diagonal support and bounced and held so far. If we go to the Dow Jones and we draw in our diagonal support from the previous pivots this year, we are actually underneath and testing the underside of it. So it is going to be very, very important to see what price does here over the next 24 to 48 hours to see if we can reclaim this diagonal support, now resistance level, and if we can reclaim our 9 and 50 moving averages that are just above current price action. If we can get back above those levels, that would be a very good development for the market. But right now, that is still waiting to be seen. If we do poke our heads up above this support zone and give it back up and roll over again, at that point, down would be the new direction of least resistance. Going out to Bitcoin. Bitcoin, we can zoom in. And you can see we have not only broken our 9 EMA, but we have also broken our 20 EMA. And we have not broken that all-important 20-period moving average since all the way back here in the beginning of October. So it has been a couple of months now that we have been holding above that line. We have broken it. Our RSI and MACD are signaling bearish. I have a mixed or competing theme on Bitcoin right now because even though all of the indicators, all of the price momentum is signaling further depreciation in price, my overall theme for Bitcoin is still intact and still bullish. I still believe that we are in the midst of a longer term bullish move. So if we put this out to a 3-year weekly chart, we can remove our drawings to see that a little clearer and zoom in. And on the weekly chart, this chart has done absolutely nothing wrong. We had big movements higher. We consolidated for a long period of time. We had one more big move higher. We are now in another period of consolidation. Now, how long will this last? How deep will it go? That is anybody's guess. I am basically in my thesis expecting that the 9 EMA will be tested, that price might come down below it slightly into the low 90s or high 80,000 marks. But I do believe that this rising 9 EMA is probably going to hold and that buyers are going to come into the market likely pretty decently hard if prices get down and test that 90,000 level, which is about 5,000 below where we currently are trading. So right now I am still doing mostly day trades. I still hold my longer term positions, and I am willing to play both sides of the coin here to the top side and to the downside. Ultimate confirmation that the bullish move is back intact is going to be if we get back above that $100,000 level and can hold a close for a daily candlestick back above 100,000. Going out to Ether. If we are looking at Ethereum, more volatility has come into Ethereum than on Bitcoin. We have bounced off of the 50 and 200 period moving averages, and I think this movement is mostly over. I think that the low has probably been put in here. I do think we are likely to get a retest of the 50 and 200 here before prices stabilize and start to move higher again. It will likely take a little while for prices to stabilize in here, to let our shorter term moving averages come down, converge, and get back underneath the price action to start acting as support instead of overhead resistance. But I think most of the damage has been done here, and I'm going to be looking to bottom feed to pick up Ethereum on lower prices to come in the week or two ahead after we get a little bit of stability. Going out to gold. Gold story needs to be told on a longer term chart, so we're going to go out to a 3-year weekly, and we are going to remove the drawings. And here you can see we are below the 20, SMA and the 9 EMA as well. We are fighting for support. If we get back above and close above 2690, or let's just call that 2700, that would be a confirmation to the upside, showing that this pattern has completed. Right now, we are still just in the midst of a little pennant or rising ascending triangle. So until this breaks to one side or the other, we don't have a strong significant edge in terms of statistical probability. But if we do break back above the top side of that, it will signal bulls are back in charge. If we break down and break below this, the next stop is likely going to be down in the 2450 to 2425 range, somewhere in there. So if you have long-term gold positions in stocks or ETFs, it is probably time to be writing a little bit more aggressive covered calls than you have done in the past. If you are an option trader and want to cash flow against your position while this sorts itself out. If you are not, probably just hang tight. Gold is a long-term investment. It should be a long-term investment. So any price depreciation will likely be temporary on that. And I do not think we have reached the highest point of this cycle on gold. Going out to silver. Silver, again, a little bit more crazy than gold. It is the erratic stepchild of gold here. I do not like the extra volatility and big wicks that we are seeing in silver, so this is a stay away for me for a while. We are also seeing divergence in both the RSI and the MACD. We are picking up momentum to the downside on the MACD, so I am expecting, if nothing else, at least coming down and testing this weekly rising 50-period moving average around 2870. Then we will need to jump into the daily chart and see what goes on there, but that will mean that the prices will have violated this 200-period moving average, and that likely will also mean that it's going to take a little bit longer in terms of time to develop and clean itself up for the bulls to be able to come back and try to make another leg higher. So this is going to be a stay away for me for longer term, and short term potentially playing either side depending on what the chart does at this all-important support level on the 200-period moving average. Going out to copper. Copper to me is a stay away. We do have a pretty significant support level here that has been held and tested multiple times in the past. If this violates to the downside, the next stop would be 3.9. If it doesn't, and instead we clean up, I'm not super interested in a bullish move until we get back above the rising 200-period daily moving average, which is around 4 at 33. So this is likely going to be a stay away for the next week or two until price action signals where it actually wants to go and gives us a cleaner read. Going out to Palladium. Basically, same thing as silver and copper. This is going to be a stay away for me. I don't have a strong enough read to the downside to be willing to take that trade unless it is a quick short-term trade and a break below 900. If we do get that break, a quick target down to about 815 would be intact. But I am more likely to stay away from this chart in the short term than anything else. I don't tend to like these little grindy movements. When I short something, I am looking for vicious volatility like this move here. But right now, we are just kind of caught in this little grindy motion that has whipsawed back and forth on any given day a lot. And that gives me more uncertainty with it than anything else, because even if you are correct on the direction, if you have your stop too tight, you will just get stopped out. So this is a stay away for me. Going out to platinum, very similar read, little bit more strength than palladium, but still not super interested. Doesn't have as clean of a shorting opportunity here because we have tested down below at multiple levels here in the past. So there's not a clean trigger to the downside. To the upside, we do have a cleaner diagonal support and resistance zone here that we could play off of, but directly above it, we have really important daily moving averages. So to me, I'm not interested in bullish on this until we get back up to about 980 or 975. Other than that, this is a stay away as well. Going out to crude light. Crude light is continuing to hold in a fairly tight range for it between 66.60 and basically back up to 72.75. I'm not going to be surprised by price action moving either direction within that range. If we do put it out to the weekly chart and zoom in a little here, you can see that even if we did decide to play the diagonal breakout to the top side, we have a small window up to about 75 or 75.60, but we have a bunch of overhead resistance still. So this is complete stay away for me right now. Going out to natural gas. Natural gas overextended to the top side, one of the most bullish moves out of everything that we've seen in the market currently. It is defying gravity. This is usual for it coming into this time of year. Natural gas is usually used more to heat homes in the winter, which is a good theme for playing this to the top side, but it is overextended. This movement looks like it has exhausted itself and it needs to reset before we consider it for any trades. Going out to the US dollar. US dollar had a little bit of a pullback on Friday, but had a massive move higher the few days before that. And I am not super excited about seeing the bullish momentum continue on this. This will continue to put pressure on the equities. And if the equities market and the major indexes actually continue to break down, this taking another big leg higher like this would break it out to a 3-year high on the US dollar. And that would put a lot of pressure on the equities market and probably cause the S&P and the Nasdaq, the Dow Jones, and the Russell 2000 to all take a leg lower and potentially actually establish a daily downtrend. Not saying a longer term downtrend, but a daily downtrend is in the cards right now for the short term going into the next month, month and a half, 2 months, somewhere in there, waiting for that stability. So we need to keep an eye on the US dollar and make sure that any trades that we are taking are protected to the downside and we are controlling our risk if this movement starts to get out of control. With that, let's go out to our heat map. This is a 1-week performance looking at trading gains and losses in the S&P 500 from last week. And you can see very little green on this space. What that means is money has been rotating out of the market and likely into cash for the short term. So I am not likely to be bullish on much of anything other than day trades going into this last trading week for the year. I am going to be looking for more shorting opportunities going into 2025 than bullish opportunities, at least as of now. Finally, last but not least, going out to Forex Factory, looking out to the week ahead. Again, Wednesday, market is closed. Tuesday, we have a shortened trading week closing at 10 a.m. Pacific Standard Time. Only economic data that we have comes out before market trades open on Thursday, December 26th, and that is our unemployment claims. I'm not expecting this number to come in so far out of alignment that it will care for them or be of interest to the market one way or the other. So as far as I am concerned, we don't really have any economic data we need to concern ourselves with this week. It's going to be more so the trading holiday and just simply lower liquidity and therefore higher volatility on price moves. So with that, guys, as always, trade safe. Let me know if you have any questions. Hit me up in the comments. Please give a like to the video, share this with people that you think might be interested in trading or learning to trade. Really helps me out. And don't forget to enter the contest for winning one of 3 coaching sessions with me going into the new year to get yourself lined up to be able to profit in 2025. With that, talk to you guys soon.